Hey, this is Justin with DayTradeTheMarkets.com on Tuesday, December 18th, and I want to take some time here in a moment and do kind of a bar-by-bar replay of the emini S&P and look at the rally today and look at some of the clues and kind of break it down as it's happening in terms of the logic that we like to use and what the software was telling you and so forth, and look at some potential trade opportunities that we like to look at. So I want to do that, but first I wanted to look at just real briefly at the gold today because we had quite a sell-off, and I just wanted to look at just a couple of clues in case you're a gold trader, because today was a pretty interesting move. Heading into the day and yesterday we had a bit of a resistance around 1700, so that was something going into the day that we wanted to monitor. And this is a 1 minute chart. Same would apply to any chart or any time frame, I should say. But you could see that we always like to look at our first major structure, and by that I mean a level 2 or a level 3 buying or selling aggression bar. And this was a small one, but it was a level 2 buying aggression bar. It might be a little hard to see on this video. Made by buyers, and we want to see, is there follow through? Can we get through this 1700 level, or is there rejection? And you can see that the low was taken out, full bar below, so we'd consider that rejection. So it's our first minor clue that at least on the first push early in the day by buyers, they were rejected. So the bears, we would have to say, are a little bit more in control. Another small structure there, level 2, basically the high holds there. And then our first extreme structure is a level 3 selling aggression bar. We want to ask ourselves, do we have follow through or do we have rejection? We always ask ourselves, can the high of a selling bar hold? And that's exactly what happened on that bar. It held. And then you can see we just had we had a high velocity move box and then a level 3 selling bar, a rejection of a level 2 buying bar, another level 3 selling bar. You can see that the red zone here, the support zone, holds nicely. Our filter at this point is showing us some strong order flows coming in on the sell side. And then we just have this excessive breakdown lower. New low was made on the day after we'd already seen some selling clues with this level 3 selling aggression bar, followed by 3 more right in a row. Rejection of a level 3 selling structure. So you can see we just kept breaking out on the lows with these level 3 selling aggression bars. So just in case you trade gold, just an interesting chart to look at, especially at this breakout right here with these for this waterfall series of level 3 selling aggression bars, telling us just sellers are just really in control of the market at the time. So now I want to go and look at the emini S&P from today and do a bit of a bar by bar breakdown or replay and kind of talk about the logic with that. So hold on one second. Well, I apologize about that, but for some reason the replay feature is not working for me right now, so I'm going to still try to use the same logic and break down the chart, kind of looking at it structure by structure and in terms of the thought process behind each. Before I do that, let's take a look at the big picture. We always like to put the market in context each day, and just to give you a little bit of a background here, our software gives us a lot of real-time information, but we also like to look at some bigger picture information that we do on a nightly basis in our member center, where we look at our bigger picture bias and some bigger picture key levels that we like to monitor. So just focusing for right now on this, heading into the day, if we looked at our in our member center report, the main line in the sand, so to speak, was the excuse me, at 2550 here. We were looking at this kind of as our I guess you could say line in the sand, that if we could get above there and stay there for 30 to 45 minutes heading into today, it was kind of all systems go on the upside. So we were a little bit mixed, bigger picture bias, but if we could get above 2550, it was kind of, all signs were pointing to the bigger picture bias of the market being up. And you can see that early on in the day we tested by one tick here right as we opened, and then we also tested right down to the tick about 30 or 40 minutes into the session. And it's interesting, I don't have the chart up right now, but if you look at a YM chart, we actually had the first major structure of the day was a strong selling aggression bar that tested this basically same level on the YM and was quickly rejected. So that's a little bit of additional evidence if you're looking at it. But anyway, the point being that within the first 30 to 45 minutes, we have pretty clearly established that the 2550 area is holding. So our thought process bigger picture, before we even start to analyze any of the shorter term or real-time evidence, is that the market, all things equal, we would rather be on the long side. So hopefully that makes some sense. So the next thing I want to look at here is the first major structure of the day, which happened right here. Hopefully you can see that, but it's what we call a level 3 or extreme buying aggression bar. Okay, so when we have one of those bars, we obviously want to ask ourselves, do we get follow through or do we get rejection? But before that happens, we want to ask ourselves, is there some kind of opportunity here? And again, knowing that the 2550 area held and knowing that our, kind of all signs were pointing to the long side, we'd like to ideally be looking at this point for a way to get into the market long. And so you have a couple of options, and try to put yourself, and I'd like to do this in replay mode, but try to just put yourself in the perspective of, this is the last bar, the right edge of the screen is this dark cyan bar, this level 3 buying aggression bar. As soon as that forms, and again we've had some evidence that we probably want to be on the long side, we try to think about how can we get into the market. So there are a couple options when you have a level 3 buying aggression bar. Now this happened to have made a new high by a tick, so one way to go is just to take what we call a breakout trade. When you have a level 3 bar on the high of the day, when you have other evidence that points you can just get on a breakout. Now obviously you'd want to keep your stop at least below this, so it's a little bit of a risk on the breakout trade, but it guarantees you're going to get into a move. That's one option. Another option is what we call the level 3 retracement. So as soon as, when the logic here is that we expect a level 3 bar here, the low of that to act as as support. That's basically where some extreme buying came into the market, so we would expect that level would be at least tested, and if it was tested, the buyers would withhold that area and it would act as good support. That's the expectation when we get a level 3 bar, especially when we have other context. So as soon as that bar comes in, certainly what I am thinking is I want to put a limit order a tick above the low of this bar and try to get on board with a level 3, what we call a level 3 retracement trade, because again we have context that we want to be on the long side. So as soon as that bar forms, if you're not going to take the breakout trade, which you certainly could, you want to at least put a limit order in there for the level 3 retracement trade. Now, if there was a scenario where the market did not retrace, you didn't take the breakout trade, the market did not retrace down here to the low of this bar, you can also take what we call the level 3 continuation trade, and that would be if there's immediate follow through above this level 3 bar, and then we have a full bar within 2 or 3 bars. So in other words, it doesn't retrace at all, it just right away just continues higher. Then you could look to put a limit order a tick or so above the high of this bar. Now in this case, the level 3 retracement trade worked out absolutely perfectly, but that's the thinking in terms of when that bar first comes in. You have a few options. Number 1, breakout trade. Number 2, retracement trade. Number 3, if it does not retrace, take the continuation trade and try to get long at the high of that bar after we've seen some follow through. Okay, so hopefully that makes sense in terms of ways that you could use it. And obviously you can also just use this as evidence that bulls are in control and use another entry method that you might already be using. That goes without saying. So then you can see that if you did get long with this level 3 retracement trade, our first potential sign that selling was coming in was this level 3 selling aggression bar a few minutes later, about 2 points higher. When that comes in, and again try to put yourself in the perspective of this bar is first coming in, it's our first sign selling might be coming into the market. So at a minimum, and depending if you like to scale out or if you like to hold your entire position, at a minimum you're going to probably want to raise your stop from down here where you got in, raise it 2 or 3 ticks, so it's a tick or 2 below, probably 2 ticks below that level 3 selling aggression bar. That way if there's some follow through from this level 3 selling aggression bar, you've locked in at least a minimal profit, you're not going to get hurt. Now when that gets rejected within 2 bars and its high gets taken out, that's a very bullish sign, and it's a pretty good indication. We want to try to hold this as long as we can, really. And you can see that we don't have any major structures, just some level 1 buying bars. Our first potentially bearish indication is this level 2 selling aggression bar. And again, this depends on your style, but if you like to try to lock in as much profit as possible, then you certainly at this point would probably want to put your stop a couple ticks below the low of this level 2 selling aggression bar, especially when that next one comes in as well. And if that were the case, you're going to get stopped out right here. Still a very nice trade. Yes, you didn't get the whole move, but you don't know that as it's happening. You just are looking to see if there is some selling coming into the market. We see some selling, couple that's taken out by a couple ticks. We even have a full couple bars below. So at that point in time, you don't know it's going to continue higher. At that point in time, that's a pretty sensible exit opportunity. So in other words, you're not just blindly taking exits. You are, or not getting out too early, not trying to hold on for too long. You're waiting for some actual evidence to show you that that some selling might be coming into the market. And some selling was coming into the market at that time. You can see that it got blown out of the water right here when the new high was made on a high velocity move, and then another level 3 buying aggression bar. And so at this time, you have another choice when this comes in. Do you want to try to get into the market again? You can go with the breakout trade, which you get in right in here. It certainly goes a couple points in your favor before retracing. You also have the option of the level 3 retracement trade, which is somewhere right in here. You have the option of, I'd like to see a little bit quicker acceptance above. You have the opportunity for the level 3 continuation trade. Now, in our opinion, and what we put in our manual is, this was the start of the vertical, was this first level 3 buying aggression bar. This is our second one of the move. We haven't really had any kind of retracement. So, in that case, and here, later on we have a third one, there was a bit of a retracement, but the first one is the best one for that continuation trade where you're looking to potentially get long at the high of that bar. Doesn't mean it won't work. It just means there's more risk. Once you get to the second or third major vertical event of a move, you're a little bit more, your probabilities go up a bit when you wait for the retracement. So in this case, as soon as this high velocity move and level 3 aggression bar come in, and our filter is green, all signs, bigger picture are pointing to up. So again, you're looking for another way to get in long. Probably the most common sense way would be to look for the level 3 retracement trade somewhere in here, or even the high velocity move retracement trade somewhere in here. It happens to also coincide with this support zone, which happens to also coincide with the a very bullish filter, happens to coincide with the bigger picture bias. It's basically saying all signs point to go at this point. This is kind of our perfect confluence type of an idea where not all, but a lot of evidence is all coming together at the same time. So you've got a situation in here where, again, just to recap, green filter, bigger picture bias is up. The major level that we were watching certainly held, and that's bullish. We have a bullish structure that we know that the high velocity move and level 3 bar here, the low of those should hold. We've even got some decelerations right in here. So I mean, it's kind of that textbook confluence type of an opportunity where when you have the patience and the discipline to wait for things to really line up, you have a very high probability of success in that case. Now, of course, it obviously could have sold off and gone, could have gone and made new lows for the day. You don't know that at the time, but probability wise, or in terms of calculating your edge, you know that getting long somewhere in this area based on the evidence that I just talked about makes a lot of sense. So you can see that happens. Getting long here, you've got a structure, a bullish structure that's taken out. This yellow means it's a caution zone. Normally that would be red, but when it's yellow, it's telling us there's a lot of strength behind the market. This is not really necessarily going to act as resistance. You want to monitor it, but our expectation is that it's going to go through. Then you can see we make new highs with a high velocity move and a series of level 3 buying aggression bars. Now, by this point we've rallied 15 points, but it's still all signs are bullish at this point. It's not until we have this bar here that it's our first sign of potentially bears coming in. It doesn't mean bears are taking over, but it's our first sign that this at least full-on wave of buying might be coming to at least an end. So a good stop location would be a couple ticks below here, somewhere in here. So certainly another nice move. Didn't go to the moon, but a pretty nice move. Pretty high probability, not much heat when you're taking kind of this perfect confluence type of a setup. And again, at this point, you could be looking for other opportunities to be getting long, whether it's to get long toward the low of these level 3 bars, wait all the way till this next zone here. Didn't quite get there. We came a tick from this zone, but that certainly made some good sense. At that point, you've got a few options here, and then late in the day we have some high velocity moves that come in as well. But video's getting a bit long. I'll cut it short, but hopefully that makes sense. I try to. I think it's important to, even when you're looking at these charts in hindsight, like we're doing now on these type of videos, it's important to try to put yourself in the position and think about the logic of what you would be doing at the time. So, you know, those level 3 retracement trades, high velocity move retracement trades, like we saw here and here, and even here and here, certainly makes some good sense. Obviously, the confluence trades where you're using support zones with the filter, with structure, those obviously make a good deal of sense as well, such as this one, if this one would have been tested here as well. So hopefully that makes sense. You can use this as a standalone. You can use this as a confirmation tool for other trade entries that you might have. You can use this as a way to maximize profitable trades that you get into, to wait until you see some actual contrary evidence to exit the trade, to stay in a trade longer. So a lot of different ways to use this. Hopefully this video made some sense. If not, let us know. I can answer any questions you might have. Just send us an email at info@DayTradeTheMarkets.com, and we'll be happy to get back to you within a matter of hours. Other than that, good trading on Wednesday. We'll talk soon. Thanks.